on the left-hand side is a 60-minute. On the right-hand side is a 1 minute. Now, you don't have to use 60 and 1, obviously, but I just wanted to take a look at the 60. On the right-hand side is the 1 minute, and one of the things Wyckoff had indicated was that there's like 1 to 3 trend changes per day. He just gave that as a general guideline. Now, I haven't found that to be true on a 5 minute, but obviously that does happen on a 1 minute. So I'm just going to kind of go over this to show basically the wave chart. So I have price and volume, basically the price in terms of ticks, volume in terms of each number is like 10,000 contracts. So it's not 100 million that I got from the daily, but this is 10,000. If you see 7, that means it's 70,000 contracts. And this is a SPY. So how did this move start? All of that. So basically you have a grind up. And then there's some key things you really got to notice. And they're found in the price distance. So from this onward, you see that the thrust, not the thrust, but the distance, it's inaccurate to say thrust, but the distance of each of these waves was decreasing. How do you see that? You see that here, from 40 ticks to 28 to 22 to 18, one blip up on 23 and then back down to 15. So this is not in an uptrend, but the market, this is a nasty sideways trend. What you see is the distance of the waves, meaning their length in terms of ticks, is decreasing. Alright, so that's really important, really important, that you don't just focus on the volume, because that's just one factor. You will need to focus on price and volume. And what you see is that each buying wave has less pulling power. Less pulling power, meaning the distance is getting smaller. And over here, from this low onward, it starts increasing on 4 waves. All right, so this is not something small. 1, 2, 3, 4. These 4 waves start increasing. So the price, in terms of price, the waves are getting, up waves are getting smaller, and down waves are getting bigger. All right. Now, what Wyckoff said was, in an uptrend, when the distance and duration of the up waves is shortening, meaning getting smaller, and on the down waves is getting bigger, there's a problem with the uptrend, meaning there's going to be a change in trend. That's how you forecast trend. Here you see the distance getting smaller, and here of the up waves and the down waves, here you get, so the distance is getting bigger from 15 to 21 and 23. And the volume is helping to confirm that relationship, meaning the volume down waves is greater than the up waves. Here is that, here you see it like, say maybe like, I think all the way back here. We get 35 down, 30 up, 21 down, 5 up, 29 down, 27 up, 16 down, 9 up. You cannot have that behavior in an uptrend or even a sideways trend. You cannot consistently have the down waves bigger than the up waves and the down volume bigger than the up volume. This is not sideways trend behavior, it's not uptrend behavior, it is downtrend behavior. So it's just a matter of time till it's going to break. When the down waves are bigger than the up waves in terms of price, volume, and time, you're going to have a change. And this is very apparent here when eventually you do have a change. So this was a break right here, pretty big, and pulls back, down, pulls back, And that's about it. It just continues down. There's another break right here. So that's the first trend change. As the move continues down, you want to again focus on both the price and the volume. See if the up waves are increasing and the down waves are decreasing. And what you see here is they decrease here, they increase here, and here there's like a problem. Meaning from 58, 56, there's one little 15 in the middle you can ignore because it's just like some random thing. 56, 40 to 16. These waves are getting much smaller. And they're getting smaller right after that climax. Here, what you have is 21, then first it goes from 36, then goes down to 21, then 20, then 40 and 44. So again, you just draw a line going up. This is typically what happens. Like here the up wave shortened, then the down waves got bigger. Here the down wave shortened, and in the middle, like the up wave started getting bigger. So it's very telling. Now the second thing you have to do is, while you're doing this and observing this behavior, you have to make sure that the volume is confirming. So here you set 37 up, 29 down, 42 up, 41 down, 43 up, 12 down, 44 up, 11 down. Obviously, the up waves are stronger than the down waves. So how can the downtrend continue? It is impossible for downtrend to continue when up waves are bigger. It is impossible for it to continue when the up waves are bigger in terms of distance. It's just impossible. And it makes sense because you have higher highs and higher lows, etc. So the whole function of trend is that to get from point A to point B, up waves must be bigger than the down waves. Otherwise, you can't get from point A to a higher point B. So this is something that you know, as a Wyckoff student or trader or whatever, you gotta understand. And this manifests. It manifests like right here and over there in terms of price and volume. It's manifesting here, and this causes another trend change. And somewhere in the middle you have like your sign of strength, which is right here, and your LPS, which is right there. And over here you had it over here, the sign of weakness. Then you have more important sign of weakness, whatever the hell it's called. But it's just basically sign of weakness followed by a breakdown, sign of strength followed by another breakout. So this is Wyckoff style understanding of like the waves and all that. So bottom line here is, how do you know a trend is about to change? You know it because the up waves get bigger and down waves get smaller. How do you know the uptrend is about to change to a downtrend? Down waves get bigger and up waves get smaller. That's the behavior. Thanks.